Thank you for the invitation. Well, just to let the listeners know a little bit more about myself. As you say, that I do many stuff. I wear many hats, but I always say that the mariachi hat, the big one, is is investor relations at BCombinator, which is a startup hub. We like to call ourselves a startup hub because we do many stuff in the in our ecosystem. We do acceleration. We also launch events, and we have a community as well. And finally, we do also venture capital. And I'm in charge of the venture capital side of the business. Yeah. And besides that, so my in my little free time, I also mentor startups in the strategy, finance, and financing, and also advise several projects on the strategy as well. Well, I think it was kind of by accident. Yeah, it was not planned to have this kind of role or career orientation, but well, it all started in Venezuela, where I was born. I started doing investment banking there. I was doing something very technical, not what I do today. It's more like relational, commercial. Back then, I was doing a very technical role in an investment bank. I was doing the capital markets, which is a very boring stuff. I was doing securitization on Caribbean islands, and when I came here to Spain, I applied to very technical roles in asset managers. And when an asset manager finally interviewed me, the human resources asked me if I wanted to do more like a commercial role rather than a technical role. And she told me was just why, because I had proficiency in English and because I did something about diplomacy and negotiation in Venezuela. Okay, I represented my university in Venezuela in something called the MUN, which is the Model United Nations, like a big conference, a big simulation of diplomacy. And well, she thought that since I had that background and that experience, I could do a good job in a commercial role, more like a banker. Okay. I think that here in Spain or Europe in general, the private banking model consists of mainly two kind of roles. First is the relationship manager or the banker, the person that brings in the clients to the bank, and then there's the other role, which is the investment manager, the person that actually is very technical and can give very technical advice about your portfolio and how to make money, right? So I applied for investment manager role, and she asked me to become a relationship manager. So I accepted the challenge, and I started the Deutsche Bank here in Madrid in the wealth management division. It was just mainly for uh, high net worth individual clients, and then I moved to a multifamily office, which is like for people that are not familiar with the term, it's just like a private bank, but for very, very wealthy individuals, in the sense that they have so much money that maybe they can even get their own instructor to manage money. So that's what a family office does. And at a multifamily office, you advise several family offices on having best practices and in some way also controlling what the family officer does. So as you can see, my background is mainly in the private banking sector as a financial advisor, but then I had the opportunity to get involved with venture capital as well. And I asked myself, I mean, what could a banker do in the venture capital sector, right? So the only role that fit my background was investor relations. Investor relations, for people that are maybe not familiar with the role, is like being a banker or a relationship manager for a fund. Okay, maybe it is different for public companies and in companies that are in stock exchanges, but for private companies or private funds, such as venture capital, private equity, you are in some way a stakeholder manager with a strong focus on investors. That means that you're a fundraiser, you're a professional fundraiser. And you know that for raising capital, you need to know people, you need to know how to talk to people, you you know you have to have persuasion skills, etc. And you also have to have a strong understanding of the product. So you also have to be technical in some way, because you can be very good at making friends, but if you can explain what you do in terms of the technical capacities of your fund or your value proposal for investors, you're done. So pretty much that's my background, and that's what I've done so far, and that's how I ended in the fascinating world of venture capital. And I think I'm in love with venture capital. I always say that. Well, you may confirm it, Jenja. In venture capital, you either love it or hate it. There is no middle ground in it. And I think that the person that love the ecosystem, as you, as me, as the listeners of your podcast, they know that this is a very passionate ecosystem, and it's very demanding as well, but it's very rewarding because the relationships that you make here, the experiences, the projects that you have access to are top in the world on under my viewpoint. Well, first of all, we at BCombinator believe that there's a huge opportunity in Spain. That's why that's why we're betting big on Spain, uh, because Spain is like in a sweet spot between a mature ecosystem and a developing ecosystem, and we are seeing signals, more signals, racing signals of a maturing ecosystem. What is an ecosystem? An ecosystem is, from my point of view, is the collection of several relationships in a specific geography. For instance, if you do a project of, let's say, you launch a fintech, okay, and you have three people on your team, the same idea, etc. You launch it in, let's say, in Venezuela, in my country, and you can have a specific valuation, okay. But if you launch it in the US or in Israel, for instance, the valuation will probably have a zero, 1 0 more. Okay. Why so? It is because the relationships and the structure of the ecosystem in the US and in Israel, for instance, or in Europe in general, is more mature. So it gives more opportunities for the company to grow, to do better recruiting, to expand, to also attract investors, exit opportunities as well. So that's why the word ecosystem is so important, and that's why venture capitalists are always we're always talking about it. And it's because it's spinal for what we do. So Spain is in somewhere in the middle between a very mature ecosystem and a very early ecosystem, because here you can launch projects, specifically digital or software projects, technological projects, and with operating costs that are way below than the operating costs in other countries such as the US. Okay, so you can have top level projects with lower operating cost, which means it should be cheaper in general to do the same project in Spain than in the US, for instance. So what happens is you launch a project in Spain, but then you domicile the project in the US, for instance. Well, you launch a project with a very low operating cost, and now you have a project in the US, for instance. It's a very nice and reasonable strategy to make an exit, for instance, and very attractive for investors. So Spain offers a lot of opportunities for investors and as well as entrepreneurs to start projects here and to scale projects here in Spain, and then can become international. And also, it's true that the Spanish market, the domestic market here, and the closest market to Spain, which is the Hispanic market, is huge. The digital adoption as well is high in the Hispanic countries, especially in Latin America. So it's a nice environment to launch digital and software projects. That's why our focus at BCombinator is digital and software, or deep tech as well, but very related to software rather than the hardware. So that's why Spain also, of course, maybe it's obvious, but I think it's worth saying it. The weather in Spain is awesome. It's excellent, and that's something as well that attracts a lot of talent, digital talent, to Spain. They want to work here. They want to uh, establish themselves here. They want to have families here, and you're seeing more and more, for instance, in the Mediterranean provinces of Spain, expats from the technological sector wanting to launch projects in Spain, establish in Spain, and also hire people, work talent in Spain. So there's a lot of factors that make Spain something very attractive right now. And how long will it last until we become a very, very mature ecosystem where valuations are maybe the same in the US or London or Israel? We don't know. But right now, we're in a sweet spot. So now trying to land on B Combinator on the dynamics of financing and how startups operate. The startup model is to grow very fast. That's why sometimes you can't grow organically. You need to raise capital to maybe hire more people, maybe invest in marketing, etc., 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 or invest in your MVP if it's very technical, etc. So I have investors, for instance, that are traditional investors in our venture capital fund, which are they are traditional entrepreneurs or businessmen, and they are not accustomed to see companies that grow from 0 to 1 million euros in revenue in 1 year. That's something that wasn't happening maybe 20 or 30 or 40 years ago. Okay. In the past, companies had to grow organically. So for them, it's very exciting to see a new type of model of raising or launching ideas, which is a startup model. So for this kind of model, which is the startup model, there are several institutions which help the startup grow faster. One of them is accelerator. An accelerator is basically a kind of network or close ecosystem to support a startup. Some accelerators are very focused on, let's say, on fundraising or in the technical side of the business, or maybe they give you like a specific package and you can take whatever you want from the package in terms of, like a consultancy service. Okay. But at the combinator, we want to do something different. And that's why we only take around 2 to 3 projects a month to accelerate from 100, almost 100 that we receive each month. And they apply to our acceleration program. So we're very picky in some way, but it's also because we take care of the founders and what they need. It could be easier and more scalable to just make a package of acceleration, that a package that has um, let's say a technology support and back office support and marketing support, a package, and you take it. That will be highly scalable. However, it will not be efficient for the founder. The founder needs something that fits them as a suit, as a tailor-made suit. So that's why in our acceleration programs, we always interview the founder to understand their background, what they like, what are their lacks. For instance, Janja, if you come from marketing and you want to launch a company, maybe you need assistance or support in technology, let's say, or in bringing a team together, whatever. But maybe in marketing, you're a very specialist, so you don't really need support in that. So why should I give you a package where there's a lot of marketing content or support? It makes no sense, and that would not be efficient for the founder. So the founders like a lot the combinator because it's like a tailor-made suit for them. There's our acceleration programs are not equal. They are very specific for each founder and all the needs of the project itself and also the funding team. And So the acceleration programs also bring in a very attractive opportunity to invest, because in the pre-seed sector, which is the very early stages of a startup, because the startups finance themselves through rounds, and they start with something called the 3F, friends, family, and something called the friend, family, and fools. Then you do a pre-seed round, then you do a seed round, maybe then you do Series A, Series B, Series C, etc. So in the world of the friends, family, and fools, pre-seed, seed, that's what we call the early stage. The acceleration programs play a key role in this, making the projects investable, in making the projects attractive for investors. But also, if you are operating an acceleration program and accelerating the companies working together side by side with the founders, you are doing some kind of due diligence, right? Actually, you're doing the best due diligence you can do, because you are not asking the founder to bring in some data in a data room. You are working with them hand by hand. So you know them by heart. And that brings a huge opportunity to understand the the value of the project itself. That is more than an idea, because ideas are not worth anything. What's worth is your capacity to execute the idea. So when you are in the early stage of startups investing, you have to know that you are not investing in ideas or numbers. You're mainly investing or betting on people. You're investing on people and their capacity to execute. So, what's the best due diligence that you can do to a person? It is to work with them. It's not about numbers, because it all can change. You can pivot, even if you have clients, whatever, you can pivot. So it's a very fluctuant ecosystem, and you have to know that your focus has to be the person. So we saw that in the acceleration program, and that's why we started to launch a venture cap, because we saw a huge opportunity to make educated bets on these founders, also to diversify a lot, because we are sector agnostic, so we admit almost any kind of a startup to our programs, and we have um, marketplaces, we have fintech, we have health tech, we have deep tech, we have everything. So it also helps us to diversify a lot our portfolio and our exposure to the ecosystem, and as well to enter in very low valuations, because we enter in a stage that is so early, so early that it's very competitive in terms of valuations. Think that the average business angel here in Spain, which are investors that also operate in the early stage ecosystem, they may enter in valuations of around 2.5 million euros on average. We enter in valuations of around 1 million euros on average, less than half of the average valuation for the outsiders. Why? Because we are originating the opportunity from scratch. We make them investable. So if you combine a perfect due diligence with a very low valuation, excellent projects, very diversified, you create a very niche and interesting product for investors. So that's how the ecosystem is right now in Spain, or at least our view of the ecosystem, and mainly how acceleration programs and venture capital firms operate. There are also other venture capital firms that they compete with other venture capital firms in terms of deal flow. It's not our case, because we originate our own deal flow. Why? Because we have an acceleration program. However, we also accept sometimes projects that come outside from the acceleration program. They're very good, but it's only one third of the portfolio. Our main portfolio is companies that come from that acceleration program of BCombinator. So pretty much, I think that that's how the venture capital acceleration programs work. Yeah, that's a very interesting question, and thank you for bringing it, Jenja. Um, it's very interesting, and our view is, well, I'm going to give you an example. I think we can agree that, for instance, Israel is one of the most advanced technological ecosystems in startup environments in the world, and you know that their domestic market size is tiny. probably one of the tiniest in the world. So why are people investing so much in Israeli technology? It is because Israeli entrepreneurs are born with an international view of business. They have to create international business from day one. If not, they're screwed. Why? Because they can't sustain a product on just the domestic market, right? So it's more a mentality or a mindset or a focus than the market size of the specific country where you launch your project. That's why at BCombinator we always say that we want to work on the mindset of the entrepreneur. We don't want people that solve problems because back in the past, a startup was a solution for a problem. Okay, that's fine, but that's not very scalable. Maybe it can be scalable, but we want people that, okay, for sure you have to solve a problem to make money, right? But we want them to think from day one that they are going to become global players. If they don't have that mindset or that vision, that's not for us. Why? Because in our model, the best startups have to give us around 20 to 30x returns without being unicorns. And I'm going to be more specific about that later. But yeah, so how can a company give you as an investor 20 to 30x returns, 30 times returns? It's very hard, but for that, you have to build uh, an international player, a global player, a world leader. And the only way of doing that is from day one to change your mindset. You're not solving a problem. You are creating a leader in the industry from day one. And we believe that kind of focus is a competitive advantage itself. Why? Because when your competitors are focusing on 1x or 2x or 3x opportunities to scale their businesses, you're focusing on 10x, 20x opportunities. So just your focus filters your pipeline of tasks as a founder. And that's why there are some founders that with the same amount of effort build tiny companies and others with the same amount of hours with the same team build gigantic projects. It's because of just the focus, what you want to build and what you have in your mind. That we believe that's very important, especially because of we live a competitive advantage. So about the unicorn that you said, if we want to build unicorns, if you see the statistics, you will see that unicorns are not very likely to happen. So to base your model on unicorns under our perspective is not very honest. That's why we operate in a stage that is so early that give us excellent returns without needing unicorns in our portfolio. So I mean, you know that every venture capitalist have like their Excel to simulate their portfolio and how they will grow. Well, in our portfolio, we don't count any kind of unicorn. If there comes a unicorn, it will be excellent for our returns for our investors. However, the returns that we tell our investors to expect, which is around 3x net for the investors at the end of the fund, which is 10 years, on average, it doesn't take into account that there will be a unicorn. If there will be a unicorn, it will be maybe X or so or more, hopefully. But we're not focusing on unicorns because we believe that it's an idea that is statistically not likely to happen. However, you can build international businesses. We also believe that if you focus on execution and building international players, the unicornness will come as an effect of the cause, which is doing things right. Okay. Yeah, and on the European level, I think that um, European authorities, are conscious of the obstacles that Europe has to bring in the full potential that we as a region or have to lead the technology of the technological business. So that's the first part, to become conscious of what's between your goal and you. And I think that we're taking measures for that, maybe in bureaucracy side, maybe on incentivizing more funds to come to the venture capital industry. For instance, you know that in the States, lots of pension funds and insurance companies invest in venture capital. However, here in Europe, they invest as well, but not as much as in the States. And it's from one part because it's they don't have a lot of know-how on illiquid assets, but also because there are not a lot of incentives. So I think that the authorities in Europe are taking notes on that, and they are trying to create legislation to promote funds flowing to the venture capital industry, because they know that it's final for the Europe that we all want, right? And so what I see in 5 years or 10 years, I see way more technological Europe leading the technological race as well, catching up. You may call it catching up. I see Spain as well leading the technological ecosystem, especially in the Mediterranean, because we have a strong and secure jurisdiction. We have probably one of the nicest weathers in all Europe. We have a strong technical capabilities in our workforce. We have a strong research capabilities in our universities. So if you put that a lot together, it gives you like a perfect recipe for success. And you also have more and more funds in Spain betting for Spanish technology made in Spain, and people like BCombinator, we're not the only ones, but people like BCombinator and trying to change the mindset of entrepreneur in Spain. So we are very, very, very what you will say, like in Wall Street, you would say we're very long Spain, right? Because we're betting a lot in Spain, because we believe that we are in a sweet spot right now to invest in Spanish companies, and we see a lot of alignment in terms of the European Union and in terms of the Spanish administration as well. You know that Spain is investing big on AI right now. We think that that's one great initiative. Now we have to see how they execute that. But so far, it's a very good initiative. So there's a lot of public support for an ecosystem, and we believe that that's critical for the success of the ecosystem. I always take as a reference Israel, because you know that I work on a Israeli venture capital before, so I'm very familiar with the ecosystem. And Israel is what it is today because of public support. It had a strong public support back in the 80s, in the 90s, for the venture capital ecosystem. That's what made a winner technological ecosystem. So I'm a huge believer of the public role in the venture capital and technological scene, and I'm sure that we were capable of reaching goals and transformations such as the one of Israel or US or London. It's just a matter of time and a matter of having nice legislators and administrators in the public sector that want to take care of the necessity that we as a country have to keep innovating and funding the best entrepreneurs. I try to read a lot. Sometimes I can't reach my reading goals, but I'm really what people call a bookworm. So I fortunately uh, have a lot of people around me that advise me on reading specific books that are really life changing. I am a huge believer of the power of books to change lives. So there are some books that might be excellent for founders specifically if they're listening to us. I would say that the first one of all, or number one, would be Essentialism. I have my Goodreads right here so I can read the full title. It's the Essentialism, the disciplined pursuit of less. I think that that book is transformational because it gives you a mindset, which is the basis of everything, a mindset, a framework to think about what's really worth your time. And that might sound like very obvious, right? I mean, of course, you have to do the essential, only the essentials. However, we are not trained to recognize what's essential in our lives and in our projects. So that for me, that book was foundational for everything I've done so far and for how my team works at BCombinator. And I can tell you that there was a huge difference before and after we applied these principles. I would also say that the personal MBA is an excellent book for entrepreneurs and for business people. It gives you a lot of like tools and mental models, etc. I also recommend reading the Poor Charlie's Almanac. I'm a huge fan of Charlie Munger. You know the partner of Warren Buffett at Berkshire Hathaway. Even though they are not very technological or venture oriented, they are more like the old school style of investing, value investing. However, their models, the mental models and the ideas are permanent. I think that they can go handy to any kind of entrepreneur or investor or business person. So for me, it would be those three books: Essentialism, The Personal MBA, and Poor Charles Almanac. Thank you, Jenya, for the invitation, and thank you to the audience as well. Hopefully, I gave my grain of sand, my little grain of sand. So yeah, count on me for further episodes.